The market fails to break out and tumbles. How low can she go? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about a few paths, all of them having the A wave going up towards the 5,600 to 5,630 area, and then a retreat and seeing what happened there. And that's exactly what we saw as the market went up to 5,600 and failed, and then broke below our key levels that we gave yesterday. I told you that below 54.70 to 80 would likely lead us to a test of the lows, and that's exactly what we saw. Now the question is, how low can it go? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, I did want to go over our end-of-month totals. We had them on yesterday's video. I have them here again today. A winning month for both PT and I. PT absolutely killed it, 87.5 ES points, and my room doing well on the day trading as well as the swing trading. So if you want to be part of this winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. Yesterday, we talked about the fact that this should extend up to 5,600 to 5,630. Anywhere in there would be an okay area. We did see it close this gap here and fill 5,600, and then they sold it off completely from there for the rest of the day, going back to test the lows. We also looked at 54.70 to 80 as our area that the bulls needed to hold to keep this alive for a direct move higher. Otherwise, we'd test the lows. Again, we're down here. Those key levels are important, and it's important to know when and where you are right and wrong. So as we come down, I would expect at least a new low on the ES. NASDAQ doesn't necessarily have to get one. And if this is going to be a bigger ABC, where this is A, B, and we're getting C down now, it targets about 5,300. It's a pretty low C wave and starts to get into some dangerous territory for the ES, and that would mean dangerous territory on the NASDAQ as well. This area here, this 52.75 area or so, this low back in May, that is a key area and would be a first warning to the bulls that a top may, not is, but may be in. A break of the April lows is a major warning, but this low right here is very significant in the overall scheme of things as it is a potential wave 2, and a break below that would invalidate any kind of diagonal count back to the upside. So as of right now, we would expect 53.07 to hold. I'm not so sure it'll get quite that deep. Remember, the 21 moving average is right around this blue box at 53.85. Which is also the 764 and an acceptable target for a C wave. So I would watch this blue box first around 56.85 to 53.85 to 53.60. Excuse me. 53.85, 53.60, I'd watch this blue box and then see for a reaction from there. If they break through that, then I'm looking at 53.07 next as a major target to the downside. Now, if they don't break this low, it becomes a pretty corrective and ugly pattern to the upside where you have an A, B, C for A, and then you have an A, B, C for B, and then you have a C wave up, and this is the first A leg, and then you have a really deep retrace in B, and then you'd be looking for a C wave up to complete an A leg, and then a B and C after that, which would take us to all-time highs in a more direct manner. I do think we need a low. I don't think this pattern is going to play out in this way. I do think if they're going to come down here again for the third time, they look to break this low, even if it's just a spike of this low. I would look for a new low on ES. I think if they're going to break the low, though, I would look for this blue box and then 53.07. If the bulls do take it back through the highs from yesterday, they still need to get through 56.30. That is going to be a major resistance area. If they can get through that, that is a strong signal that we're on our way back to all-time highs. So key levels to the upside for the bulls. They're really going to want to get back over this high right here at about 55.33. Then they're going to want to take out yesterday's high, and then 56.30 would be the next key level to the upside. To the downside, they want to make a low, and then we'd be looking for 53.85 to 53.60, this blue box here. Through that, we're looking at 53.07, and potentially this 52.75 low becomes extremely important for the bulls. Over on the NASDAQ. Okay, so on the NASDAQ, slightly different count because the NASDAQ did make a low back here at the end of July, whereas ES did not. So the NASDAQ doesn't necessarily need a low to make this look a little better and make it a better structure overall. But if they do, they're sitting on major support right here. This 18,500 level is going to be very important. It's kind of the equivalent of that 52.75 level on ES. And this would be the first warning to the bulls on the NASDAQ. So 18,500 just below really needs to hold if the bulls are going to continue to the upside. It's not that they can't spike it lower, it's that it's less likely as that happens. Then we would look at this low from April as our main area of support. And if the bulls can break through that, or the bears can break through that level, that is a major warning to the bulls. So NASDAQ's in a little different spot. They're just above some major support. If they break that, they're looking at testing some very big support that will be kind of a tell as to whether the top is in or not. As it stands right now, they don't have to make a low. As I said, you can have an ABC up from here, and you can have an ABC up that doesn't even make new all-time highs, and then they can come down after that. The NASDAQ is much weaker than the ES as far as price location, meaning it's further away from its high. It's weaker down at the bottom overall. And so NASDAQ could have topped. We've talked about this the last few videos. We need to see evidence of that, and that evidence is breaking 18,500 and then eventually breaking this April low down here at about 17,330. If they can do that, then we will start to talk about the NASDAQ top being in and what kind of patterns we can look at to the downside. So for tomorrow and in the short term, I would look for them to potentially make a low here into this 18.5 area. This is heavy support. Again, if they break directly through that, the bulls should be worried. We would look for them to spike into this area and then turn it back up in an ABC. Again, that we'll have to see what kind of structure and how big it is, if the bulls are really going to try to take it to all-time highs, or if we're just going to get a corrective bounce and then more downside after that. But I would look for 18.5 to be strong support, and from there look for at least a corrective rally bounce back toward the 19.8 to 20,000 area. So slightly different pattern on the NASDAQ, not quite as sloppy as the ES since they do have their low in. But again, they are sitting on major support, so be careful with that tomorrow. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible plans that both come with a 7-day free trial. I want you to get in there. Make sure you love it. Make sure it's for you. Interact with the team. Become part of the group. And make sure it's something you really want to be a part of before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our education material, our Elliott Wave 4 Beginners Online course, as well as our Advanced Elliott Wave course. If you want to know how we find these key levels, get these trade setups, do all of that stuff. These courses are amazing. In our advanced course, we go through all of the advanced concepts in the market. So you got your advanced fib levels, your diagonals, your double and triple threes, your flats, triangles, and we'd go over how to trade Elliott Wave as well. So many people on here get confused because I give 2 paths, and they're like, well, how do you know what you're doing? It goes up or down. And that's not the case at all. You have to understand how the key levels work and what the prominent path is, and then you can understand how to trade it. As you can see on the screen, people are loving this course. However, I do understand it's advanced. So if you're just getting started with Elliott Wave, or you want to get started from the beginning and refresh yourself on it, we have our Elliott Wave 4 Beginners Online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It's so confusing when good news makes the market go down and bad news makes the market go up, and then the TV guys tell you, oh, good news was bad news today, which makes 0 sense. It's not a real thing. It means that the news is simply useless. Elliott knew this long ago, and he knew that key levels mattered, and he knows what happens when those key levels break and when they hold, and that gives you a huge trading advantage over the rest of the market. This course is 25 videos where we go through 3 parts: your introduction, where we go through your expectations, your mindset, and the KISS method, and basically set the foundation for Elliott Wave and trading. Then we go through the chart setup and tools, where we go through every tool we use, how we use it, and why. And the Elliott Wave 4 Beginners area, where we go through each of the waves, how they look, how to measure them, how to find the key levels, the corrective depth theory, theory of alternation, zigzags, all of that stuff, everything you need to know to make sense of this irrational market. And the really cool thing about both of these courses is if you want to get both of them at the same time, you can get them at a discount. So you can go through from beginning to advanced and truly master Elliott Wave. You get $37 off by getting our bundle package. However, if you don't want to pay anything at all, you can simply sign up for one of our rooms, and they are included for free. So if you just sign up for a 1-month subscription to Invest with Jacob for $49, you're getting over $200 worth of course material for free. Now, in our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered. A midday video. Guys, I go through a 45-minute live video where I answer questions. It can be an hour. It can be as long as you guys want. I go through all the charts. I go through earnings, everything you want to know about the bigger picture, the smaller time frames, what we're looking at, any questions you have, so that you're caught up and you know exactly where we are in the counts. It's an incredible value. We also include all of the training material you just saw. We trade the SPY and the QQQ and we swing and day trade, so I trade quite often in my room. If you're looking for futures, individual stocks, income trading, which as you saw at the beginning of the video, PT made 87.5 points just sitting around watching time go by, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading. Again, his income trading method is killing it, and his reduced risk binary method that absolutely crushes the market. It's how he structures that trade that's so unique. Something you kind of have to see to understand, and that's another reason for that 7-day free trial, so you can see it for yourself and make sure you like it and you understand it. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love, love, love to have you in these rooms so we can all make money together. All right, our key takeaways for today. We are looking for a low on the ES. They've come down and tested. If they don't, it's a little bit sloppy. It's not impossible for them to not make a low. That can happen, obviously. But we would look for them to make a low. The first target area would be 53.85 to 53.60. Obviously, 5,400 will be a number that's tough to get through. But in that general vicinity, if they get through that 53.07 is the natural target. That does seem a little bit low, but it gets very dangerous. The bulls really want to hold 52.75. Below that starts to get a little scary for the bulls. To the upside, if they hold the low or if they spike the low in reverse, the bulls will want to take back 55.33 and then 5,600 and then ultimately 56.30 to give us a sign that we are on our way to all-time highs. Over on the NASDAQ, they don't necessarily need the low. They made a low in July, but if they do, they need to hold this 18,500 area. That becomes a major support zone. They really don't want that to break. It's a warning to the bears, and then below the April lows down here would be a major warning to the a warning to the bulls, and below the April lows would be a major warning to the bulls. So they want to hold 18.5 if they're going to continue lower here. If they don't, we'd look for a spike of it in reversal, but ultimately that 18.5 area. And then the bounce, we would look for a corrective bounce back up toward the 19,861, 20,125 area. As long as they're below that, short-term pressure is down. Back above this 618, and it starts to look more bullish, like we may go back to all-time highs. Guys, it's the weekend. Grab yourself a drink, get out of the house, spend some time with your family, and I'll talk to you next week.